Friends, today I have an update with regards to Navin Fluorine International manufactures auto components surged. Sorry, uh, not really sure what it manufactures, but we'll have a look. The stock surged 4% yesterday after the Q4 FY25 results. So you can see the market cap of 22,000 crores. We'll look at the numbers. Profit has grown 13% quarter on quarter, 36% year on year. You can see revenue growth of 15% from the last quarter, 16% revenue growth based on comparison from uh, F4 quarter 2024 to Q4 FY25. The board of directors have approved a final dividend of 7% per share, face value of 2 rupees each, which means a 350% dividend on the face value of 2 rupees. Navin Fluorine International is India-based company that is primarily focused on fluorine chemistry, which produces refrigeration gases in organic fluorides and specialty organic fluorines. So it's not an auto component manufacturer. So please ignore the error there. Company operates the chemical business segment. We'll go through the financials and some details. Bear with me a minute. There we go. Okay. So this is the current price 4,335, which is down 2% today. Over the last while, you can see it's down about 5%. In the last 1 month, the company is up around 4%. Last 6 months, about 32% value addition. Last 1 year, 34%. So the company has been doing well. It's a good jump from 3,200 to 4,300 over a period of 1 year. This is the high of today. 52-week high is 4,750. Today's low is 4,330 and 52-week low is 2,875. So if you consider the lowest point 52 weeks ago, you can see the company is up nearly 40%, 41% precisely. You can see the ownership strength is missing the benchmark. The stock is available at a premium value. The company could improve upon its asset employment. The company could improve its asset employment again. Both the same suggestions. Price to book value of 8.62, face value 2 rupees, book value 503 rupees, cash of 6 crore 43 lakhs, debt of almost 40 crores, earnings per share for the last 12 months is about 49 rupees, promoter holding which is about 28.4%, which is pretty low. Return on equity is about 10.6%, profit growth is a minus 25%, return on capital employed is about 13%, sales growth is a minus 13%. So, Fluorine International Ltd is primarily engaged in production of refrigeration gases and organic fluorides, specialty organic fluorines, and offers contract research and manufacturing services. Its portfolio includes 50 plus fluorinated compounds developed over the years. Then market cap of 21,540 crores. Stock P 74.6, which is on the high side. Book value 530. Return on capital employed 11.5. Stock is trading 8 times its book value. Company has a low return on equity of 13% over the last 3 years. Healthy dividend payout, which is good, 21.3%. These are the peers that the company can be compared to: SRF, Linde India, Gujarat Fluoro Clean, Godrej Industries, Deepak Nitrate, Himadri Special, and Navin Fluoro itself. You can see some companies have a low PE of 38, 39, while the others have as high as 125. So the concern is it's a high PE, price to earnings ratio, moderate market capitalization in compared to the other companies. Then you can see sales have grown in the last 2 quarters It has been a good momentum in the revenue front, good momentum in the net profit front as well, which is the reason why the company has done well probably in the last 6 months in terms of stock price and the gains that it has made in the last 1 year. So those are purely based on the last 2 quarter financials. Then you can see overall year on year, the last 1 year there is about 14% growth in terms of revenue. Net profit has not really grown much, about 7-8%. Compared to the last 2 years, the growth net profit has gone down, though there should be some momentum on the positive side depending on the next quarter Q1 FY26 results. Earnings per share is about 58 rupees per share, which is good. Then you can see sales growth 14% in the last 1 year, 25% profit growth in the last 1 year, 37 stock price growth in the last 1 year, and return on equity is about 12%, which is probably the lowest in the last 5 to 10 years. Then reserves, a little bit of increment there, which is a good sign. Then debtor days is about the same. Inventories has reduced, which is a good sign. Inventories reduced by about 15-16%. Days payable has also reduced, which is a good sign that the company is able to manage payment to its suppliers and creditors in a lesser time, though it has a good chance of improving this number further. Cash conversion cycle of 89 days, which again shows a good improvement, about 20%, 22% improvement in the last 1 year. Working capital days have gone up drastically, which again is something that the company will need to work on to improve its return on capital, because the higher time it takes in terms of working capital days, the higher the lesser the opportunity uh, to the return on the capital employed. So promoters 28.4%, FIIs 20%, DIs 30%. So FIDIs hold a big chunk of the stock. Public 21% makes the stock volatile to price, and in terms of volume, it may be found in the oversold zone if the financials for the next quarter are not as per market expectations. There is a chance that there would be a correction in the stock. However, would suggest you to still consider speaking to a financial expert advisor who would be able to give you the expert advice based on the current growth trend of the industry, the current position of the Indian share market, and all the external factors that could impact the performance of the company in terms of revenue, in terms of profit, in terms of overall growth in the industry. So thanks for watching, friends. Wish you a happy week in advance. We'll connect with another video soon. Please share this video with your friends, family, and associates, those who would benefit from this information. Also would request you to share your valuable feedback in terms of the presentation of the information and also in terms of the content. So find ways to improve on the current presentation. So thank you for watching once again. Have a good day.